What if I told you that you could have your business rent your personal home for a couple of days each year and the IRS lets you keep that income tax-free? That's not a gimmick. It's the Augusta Rule, or the 14-day home rental rule. And most business owners have no idea that they can legally pull this off. Now today, I'm going to show you exactly how it works and how you can shift taxable business income into tax-free personal income without triggering any kind of red flags. Now, you might have heard of this strategy or this concept all over TikTok or other social media, and they're either making it sound super easy, like just pay yourself and don't worry about it, or you're hearing from other CPAs or advisors that rip it apart and say, this isn't right, this wasn't the way of the rule. And so what we're gonna go today is I'm gonna flesh through all that out today so you can walk away equipped with what you need to know to do it right, do it effectively, and how you can actually make this work in your business, because you can make it work in your business. You just got to do it right. It is simply a great way to move money from your business, getting a business deduction, to you personally paying no income taxes on it. You just need to dot your I's and you need to cross your T's and make sure that we're following the rules for this and have documentation to back it up and support it. So what is the Augusta Rule, or the 14-day home rental rule? And where this really stemmed from was Augusta, Georgia. That's why they call it the Augusta Rule. And Augusta is a town in Georgia where they hold the Masters tournament every single year. And this is a small town, and a lot of people come in for this tournament and they don't have enough places to stay. So they're renting houses around the golf course out, and they make a lot of money renting their home out, but they're only renting it for a few days when people are in town for the Masters tournament. And so the rule kind of stemmed from this concept of people were having to pay rental property taxes on those where they rent their home out for a week. They'd have to pay taxes on that income that they received from that. And the IRS said, that's not really a rental property. And so they came up with this rule that said if you rent your home for 14 days or less, it's not taxable income to you. And so let me read directly from the IRS code. This is from IRS code section 280AG. And it says, if a dwelling unit is rented for less than 15 days, income is not included, and there's no deduction allowed for rental expenses. So again, if it's less than 15 days or 14 days or less, income is not included, which is great, and there's no deduction allowed for rental expenses. Well, we don't have any income, so there's no need for rental expenses anyways. Now, that's where the super powerful thing is behind this, because the IRS said that's not a rental property if it's 14 days or less. Now, these are total rental days throughout the year. It's 14 or less. So I've had a lot of people ask that say, well, does it have to be 14? No, it can be 14 or less. And does the 14 have to happen all back to back? Like if I do a rental 2 days here and then 2 days next month and then 2 days later, and I'm under that 14 for the whole year, does that still count? Yes. What the IRS looks at from January to December is the total rental days, 14 days or less. If so, not taxable income to you, and you can get a business deduction for it. So essentially, when you rent your personal home for 14 days or less in a calendar year, that income is not taxable. Now, this could be due to a Super Bowl that's maybe in your town, or a golf event like the Masters tournament, or it could be something else. But this is also true even if you rent the home to a business that's your own. And that's some of the powerful pieces behind that. So we're gonna talk about exactly how to do that. Now, real quick, if you are a business owner, stop what you're doing for 10 seconds. We built the tax savings starter kit to help entrepreneurs like you stop overpaying and start planning. Inside of it, you'll find our complete deduction cheat sheet. You'll find actual case studies of clients saving thousands of dollars in a free discovery call with our team to find the right tax saving plan for your business. The best part, it's 100% free. Go to taxsavingspodcast.com/starter kit to grab it now. That's taxsavingspodcast.com/starter kit. All right, let's get back to the good stuff. So with this rule, how do we use it properly? Because we can't just write ourselves a random check with no actual activity or proof. And believe me, I've seen this. I've talked to someone the other day that has been doing this. They're just writing themselves a check for $20,000 throughout the course of the year and say, oh yeah, that's rental income 14 days or less, not taxable to me. That's not how we do this. You can't just write yourself a random check with no actual activity or proof. That's not good. So how do we do it correctly? First, we need to have a legitimate business purpose that we're renting our house for. That could be for retreats, that could be for board meetings, that could be for client gatherings. Maybe you're hosting a training event at your house or on the grounds of your house. Whatever it might be, we need to have a legitimate business purpose. Now, one other thing I want to make sure that we clarify with this is that this is after the home office deduction. So this would be over and above the home office deduction. You can still take the home office deduction and this, as long as the place that you're renting is not the home office. So if you have your home office, but when we use the Augusta Rule, really we're renting the rest of the house. The kitchen, the dining room, bedrooms, all that's part of this rental typically. So first, We need to have a legitimate business purpose: retreats, board meetings, client gatherings, training events. Second, we need to pay ourselves a fair market rental rate. So how do we do this? We find a comparable space and document what it costs to rent that space out. So we need to be paying ourselves a legitimate rental. We can't just say, oh, it's $10,000 a day and move on with it. It has to be a real rate. So if you're hosting a board meeting at your house, you might go find out, what does it cost to rent out a boardroom at a local hotel or a co-working space? If you're having a retreat at your home, maybe and it's at your whole home, maybe you're gonna find out what is an Airbnb at a house that's similar to mine in the same area, and you're gonna use that as your comparable rate. The biggest thing is find a comparable based on the event that you're having and what it would cost to host that same exact event somewhere else. Find out what that comparable is, document it, screenshot, take a picture of it. If you have emails, whatever it is, document that is and put it on file. And that's the rate you're going to use for that rent of your house to your business. The third piece we need is we need a lease or a rental agreement in place. And that's just basically going to say, hey, what are we renting this for? What are the days of it? What's the rate? Have that in place to help just document and solidify that this is a true rental piece. The next thing is you need to make a payment from your business account to your personal account. And you want to have all supporting documents for that. So make a payment from your business account to your personal account. Now within TaxAble, we have all the supporting documents and templates for all of these different items to help you along this, finding, what is a comparable rate, finding out what the documentation is that we need to support it, documentation for the event, all of that. Now the other thing you need to think about is that if your total rental payment for your house is over $600, you need to send a 1099 to yourself. So it's gonna be a 1099 from the business to yourself personally for the rental of your home. Now you're gonna clear out that 1099 income on your personal tax return. You're just gonna put in other expenses, IRS code section 280AG to clear it out. But we want to have that 1099 in there if it makes sense. Key things around this strategy: it must be a personal residence, and your business must be a separate legal entity. So if you're operating as a sole proprietorship, this would not work. If you're operating as an S corporation, it's a great strategy for you. Okay, so let's go through an example because I think this will help drive home this concept. And these are all strategies that I've used myself in some sort of capacity. But let's imagine that this is for a full year. And let's just say that you're going to rent out your home and you have these different events. You have quarterly board meetings, you have a team retreat that's 3 days long, you have an education event, and then you're hosting a virtual summit. And let's figure out what this looks like from a tax aspect and what you actually need to help support that. So quarterly board meetings, I love to use a strategy for board meetings, whether it's monthly, whether it's quarterly, what's an annual board meeting, whatever it might be. I love to use this strategy for board meetings. And so what do you find out for board meetings? What you need to find a comparable rate for that. And so let's just say a local co-working space charges $450 a day for a boardroom rental. Document it, take a picture of it, and use that as your reimbursement amount. So if you have those 4 times a year, that's 450 times 4, that's $1,800 business expense, tax-free to you. Let's just say you're having a 3-day team retreat that you're hosting at your house, teams coming in, everything like that. And let's just say a comparable Airbnb down the road charges $1,200 per night. $1,200 times 3 is going to be $3,600 business expense, tax-free to you if your total rental day stays under that 14 days. And then let's say you hold a 1-day education event where you bring people in, you're doing education on different topics of whatever your business might be in. Again, we're going to use a comparable Airbnb rate, $1,200 a day, $1,200 business expense, tax-free to you. And then let's say you hosted a virtual summit. And I actually did this once where I hosted a virtual summit where I was doing a whole day training. It was actually a 2-day training, but I did it outside of my home office because I wanted different backdrops. I brought some TVs I could draw and did all sorts of fun stuff. But let's just say you're hosting a virtual summit that you want to do at your house. And so the comparable that I found is I found out what would it cost to purchase some studio space for a day somewhere else locally. And the one that I found was $850. It was $850 per day for a comparable studio space for that. So $850 business expense, tax-free income to me. So if you add all these up, it's over, all these where you have a quarterly board meeting, 4 days a week, 4 days a year, a team retreat, 3 days a year. So now we're at 7 days. An education event, now we're at 8 days. And a virtual summit, now we're at 9 days. So even if we just had this very conservative, very reasonable numbers at 9 days, it'd be over $7,000 in a business expense, tax-free income to you. If you're in the 37% tax bracket, that's over $2,800 in taxes saved. Now remember, the numbers I'm using here are conservative. We're not going up to the 14 days. These are conservative numbers, and this number could be a lot higher for some. It could be lower for others. So use this as your kind of tool to determine what is reasonable in those opportunities. Now, in summary, this is a real strategy with real results, but you must do it properly. This is not simply saying, oh yeah, I rented my house 14 days or less. Here is a $20,000 check to myself and tax-free income to me. No proof, no documentation. Because you know what? If the IRS comes knocking at your door, you're going to be like, I don't got any proof. That $20,000 deduction, gone. So we need to do this up, set this up properly. If your accountant is telling you just write a check and don't do anything for it, go to another accountant. You want to do this correctly. I'm not saying don't do the strategy. Definitely do the strategy. It's a strategy that I do myself, but you got to make sure you're doing it correctly. So how do we do it properly? One, you want to document the rental reason and keep documentation for proof of that. So what was the event that was happening? Was it a retreat? Was it a board meeting, which is the one that we do a lot. It's two, you need to determine a reasonable rental rate and have the proof of what that is. So if it's a board meeting, what's it cost to rent out a boardroom somewhere else? If it is a retreat and you're doing your whole home or hosting an education event or something like that, what does an Airbnb for a similar house in a similar area cost? Document that proof and use that as your basis for what you're gonna make for that rental amount. 3, execute lease agreement. 4, make the payments. 5, process a 1099 and zero it out on your personal tax return if necessary. And finally, 6, keep all that documentation on file. If the IRS comes knocking, you have this documentation. Here's my proof. Here is the background and support to all back that up. If you don't, the IRS doesn't come knocking, you don't need it. So keep that documentation on file. You'll likely never need it, but if you do, it is there. The end result from this whole concept, you get a tax deduction and it's tax-free income to you. Super powerful. Dot your I's, cross your T's, do it the right way, and get some tax-free income. So there you have it. The Augusta Rule or the 14-day home rental strategy isn't some obscure tax hack. It's a fully legal, IRS authorized way to shift income from your business to you tax-free as long as you follow the rules. If you're gonna try this, do it with intention. Document the reason, set fair market rental rate, execute a lease, and keep the solid records. Now, if you want help implementing this with sample lease agreements, valuation templates, and audit guardrails, visit us at Taxelm, that's TAXELM.com, or click the link in the description for a free discovery call. We are helping people like you lower your tax bill every single day, utilizing this strategy along with so many other different strategies. And if you found this helpful, don't forget to subscribe, hit that like button, and share it with a business owner who's sick of paying too much in tax. Thanks for visiting, and I'll see you on the next one.